How much of that upside will come from the tech hardware sector?
It's actually fairly broad-based, so you're absolutely right. The profit numbers, in particular in China, but in other parts of the region as well, in the first half of the year, they don't really look too good. In Q3 and Q4, increasingly look better. And that's not just hardware tech, it's actually also the consumer sectors, the internet sectors in China. At least analyst consensus is looking for a bit of an acceleration in some of the numbers in the second half. Comes with risk, of course, as well, in case they have to downgrade that. But the earnings numbers, for the moment, look pretty okay.
What do you like?
Well, if you look at, there's a couple of areas we like across the region. So let's take a look at China, right? Yes, the economic outlook is difficult and murky, and the numbers are coming down. But the profit numbers are actually holding up reasonably well. Now, there might be downside risk. Just to put some numbers to this, you got consensus looking for 24% earnings growth. Shave off some risk of downgrades. You still get something 15 to 20% earnings growth in China this year. That's actually not too bad. Add to that actually the global macro is going to help out a little bit. I think there's areas to look for, and everybody's on the weight on China at the moment as well. So I can see that market doing well. The other markets that we like across the region is really India and Indonesia. Those are the kind of interesting growth stories for the next couple of years in the region.
Yeah, it's interesting, though, because India has kind of been one of the proxy alternatives, seeing flows out of China headed for that market. Japan, of course, is the other one instead. Do you how do you, I guess, allocate when it comes to some of these hotter markets like India and Japan right now?
Yeah, so I think that if China performs well, the feeling is that money will come out of India. I think it might actually work out a little bit differently this time around, that it comes from Taiwan, Korea, and maybe Japan, because that's where people are really well positioned. In particular in Japan, most funds are pretty much overweight there and have positions that they haven't had for the last decade or so. So people are up to their noses in Japan, as you could say, and are really well positioned in Korea and Taiwan as well. Now, those are export markets, so that's a bit of a risk. So I think money might come out of there and might actually flow towards India in due course. But yeah, I would be a bit more cautious and not overweight on those Northern Asian markets at the moment. We'll definitely be cautious on Japan.
You're also overweight Thailand equities as well. Are you mostly kind of sidestepping the political uncertainty there? Is it having, in your view, an impact on investor and broader corporate sentiment?
No, the view that we've taken to a certain extent, actually, you're right, is that let's shift the political side away in Thailand. We've seen over the last decades, I mean, the first time I was in Thailand was late 80s, early 90s, and a lot of things were going on, but actually the markets performed well. So there's a disjunction with what happens on the street and what happens in markets very often in Thailand. So I've moved that a little bit to the side. I just looked at, say, listen, if tourism does come back, people start to travel again across the region, in particular, of course, mainland Chinese, if they go out again, Thailand will be a key destination. So I think that might lift that market. But to be honest, the numbers that are coming through are a little bit disappointing at the moment. But that's really a kind of a tactical call that we make on Thailand. The two interesting long-term stories, the structural stories in the region, it's really India and Indonesia.